All right, let's get right into it. We are now T-minus 48 hours from the Day 78 event. This is going to be the single biggest test the protocol has ever faced, and this is our final, data-driven look at how we can all prepare. And of course, you know the drill, but it's always important to say, this is for educational purposes, it is not financial advice. Please always do your own research. That's it, 48 hours. The final countdown is officially on. We are right on the doorstep of the largest single-day token unlock in this protocol's entire history. So look, the test is coming. That's a given. The real question is, what do we do about it? How do we prepare? The whole point of this explainer is to shift away from fear and toward a proactive, data-informed readiness. And to do that, we first have to look at what just went down. Think of Day 76 as the full dress rehearsal for the main event. It gave us some absolutely invaluable data on how the protocol, and maybe more importantly, how all of us holders actually behave under some pretty serious stress. And this is where things get really interesting. Yeah, the price took a big hit, down 38%. But look at what people did. They didn't run for the exits. Staking actually jumped by 19%. That's not panic selling, folks. That's a huge vote of confidence. And that right there, that's the whole story in a nutshell. Restaking beat panic, period. When faced with a choice, holders chose to double down on the long-term play instead of selling into fear. This is the key pattern we need to keep in mind for what's coming. Now let's break down those numbers, because they're pretty incredible. We're talking about an increase of over 33,000 PLAZM tokens being staked. The burn mechanism went into absolute overdrive. I mean, 490% of its peak efficiency. Why? Because at a lower price, every dollar just buys up and burns way more tokens. And the yield engine, it just kept chugging along. Didn't even blink. The core functions of the protocol actually got stronger under pressure. All right, so now that we've seen the dress rehearsal, let's apply those lessons to the main event, Day 78. Okay, let's just put the big, scary number on the table. We've got over 2.3 million tokens unlocking. At today's price of about 16 cents, that's a potential headline sell pressure of around $374,000. And yeah, that's a big number. There's no way around it. But, and this is a huge but, that number assumes every single person hits the sell button. And we just saw that's not what happens, right? So if we apply the behavior from our dress rehearsal, let's say a sell rate somewhere between 30 and 50%. Well, then the actual net sell pressure looks a lot more like $112,000 to $187,000. That's a completely different ballgame. You know, to really appreciate this, you have to see the journey we've been on. Let's take a look at how this Day 78 event has actually shrunk over time. I want you to remember this number. Not too long ago, when the price was way up at 95 cents, this exact same token unlock represented a $2.17 million threat. That was a number that had everyone spooked, and for good reason. Now watch this. As the price came down, that threat just shrank from 2.17 million down to 1.14 million, then to 602,000, and now here we are with a headline number of 374K. That's an 83% reduction in the dollar pressure. The number of tokens is the same, but the monetary threat, it has been massively deflated. So let's just put those side by side for a second. The original fear was a multi-million-dollar event. The potential reality, based on what we've actually seen people do, is closer to maybe 150 grand. That is a night and day difference. Okay, so the threat is smaller. Now, what about our defenses? What does the protocol have lined up to handle what's coming? Well, the first line of defense, we've got just under $32,000 in pure USDC ready to go for buybacks. This is split between the buy and burn and the buy and build wallets. And the best part is this isn't a one-and-done thing. These pools are constantly getting refilled by yield, so they can be used and then built right back up. Next up, the burn. The protocol can burn anywhere from about 3,700 to 37,000 tokens a day. And remember what we said earlier? This tool gets way more powerful when prices are lower. Every single dollar takes more tokens off the market for good. And then there's the ultimate backstop, the floor. This is the hard mathematical price, the point where the Treasury could literally buy back every single token in circulation. Right now, that floor is sitting at 3 cents. That means where we are now, we have a 433% cushion. That's a huge safety net, even for a worst-case scenario. Okay, so with all that in mind, let's just lay out the schedule for the next 3 days. No surprises here, just the facts. So tomorrow on day 77, it's kind of the calm before the storm. A smaller release, about 46,000 tokens. Then, day 78, that's the big one, the 2.3 million. And it's important to remember, it doesn't just stop there. Day 79 still brings an aftershock of over 500,000 tokens. So it's still a big deal, but you can see how the pressure starts to ease up. So what's the bottom line here? The big takeaway? That pressure we saw on day 76, that wasn't just a scary moment. It was intelligence. It was a live fire exercise that showed us two critical things. One, the protocol's defenses work exactly as they should under pressure. And two, it showed us what holders actually do. And they choose to restake. The dress rehearsal is over. The fear of the unknown, which was so high just a week ago, has been replaced by actual data. The defenses are in position. The protocol and its holders are as ready as we can be. 48 hours remain.